Welcome to Chapter 5, Banking Procedures. This is the last chapter we're going to do before your quarterly exam. So in this chapter, we're going to talk about the bank. How do you start an account? How do you get money into an account? How do you get money out of an account? And how do you make sure your account is balanced? Okay, we're going to start at the very beginning of opening an account and go from there. So the first thing you're going to do, we want to talk about we're going to be talking about checking accounts. We'll touch slightly on savings accounts, but they're similar in their creation and their management. So a checking account is by far the most used account, if you will, at a bank. Okay, you've seen checks. They're what's considered a written order to pay an amount to either a person or a business. It's what they call a demand deposit, and they could be from a bank, or when it says other financial institution, that would be something like a credit union. Reason why we keep our money in the bank, obviously, it's a very safe place to keep the money, and it's very easy to get your money. Sometimes the bank has some restrictions on how quickly you can get the money out, but generally speaking, it's pretty quick. And sometimes checking accounts even provide interest or pay interest, which is money that they give you for keeping your money in their bank. There's something called the FDIC, the Federal Deposit Insurance Corporation, and that's part of the federal government. And the federal government says, don't worry about putting your money in the bank. No matter what happens, we're going to make sure that your money is safe. So you keep up to $250,000 in the bank, and the government protects it. So if the bank gets robbed, if the bank blows up, if those of you who remember or studied U.S. history with the Great Depression, if there's a run on the bank, your money is protected. Obviously, if you have more than $250,000, you're not going to keep it in a checking account. You're going to have it invested in other places. Okay, so how do we go about this? How do we open a bank? You've all gone into the bank. You have seen the ladies and the gentlemen sitting at the desks as opposed to the tellers. You go and see a person at the desk and you say, I want to open an account. And they're going to tell you need certain amounts of information. So you need your ID, driver's license, social security card, passport. You need to complete what's called a signature card, which once you sign it, the bank will check against every time you cash something and sign it. It has to have the same signature on it. It's got to match. The signature card has to match. You have to give them the money that you want to start the account with. And you want to be careful when you start these accounts because some banks charge a monthly fee. Sometimes they charge you a fee every time you write a check. Sometimes they charge you a fee every time you write a deposit. So you got to be careful with that. Here's a sample of a signature card. Now, of course, nowadays they're electronic, but it's still the same type of thing. They have the account number, the date, and all your information there, and then your authorized signature. This is what they look at to make sure the signatures match, to make sure no one's trying to fraudulently access your account. So now we got to get money into the bank. That's called making a deposit. You can put money into the account. It could be coins or dollar bills. You could put a check in there. You could put a money order in there. Any type of money you could put in there. Okay. So what you have to do is you walk up to the counter. And they have all those little papers there. You have to take one that says deposit. And you have to fill out a deposit ticket. You fill it out totally and completely. And then you hand it to the teller with your money. So you have to have the current date, how many bills, how many coins. If someone gave you a check maybe for your birthday or something, you have to put the check number and the amount. Then you have to total that all up, and then if you're getting any money back, and then your signature, and then your deposit amount. And then you take this information, the total deposit, and you record it in your check register. The check register is what we use to help make sure our account stays in balance. Okay, this is a sample deposit ticket Feel free to take a screenshot of this, and when all the terms are up here, and keep it for your records. You can print it out or just save it. But number 1, you write the date. Current date has to be current date. Number 2, the paper or coins that you're depositing. 3 is the coins. 4 is the check that you're writing. That you're depositing if someone gave you a check. And number 5, you write it there. There's more. Number 6 is your total of all the checks if you had to use the back of the deposit ticket. 7 is the total amount you're depositing. 8 is the amount you were going to get back, if any. And then your net deposit is number 9. Not every bank looks exactly like this, but it's all similar in structure. Okay, the next thing I want to talk to you about is endorsements. You've all seen people take a check, flip over the back side of it, and sign it. That's called endorsing a check. There's 3 different kinds of endorsements. By signing the back of the check, it means you're changing ownership of the check. So you're changing it from you to somebody else. There's 3 types, as I said. First one is a blank, which you just put your signature on it. The next one is a restrictive, which just means for deposit only. And the other one is a special, which is where you can transfer the ownership from you to somebody else. I'm going to be honest with you. I'm always cautious when I go to do any of these kind of signatures, because if you make a mistake on them, the bank could reject your deposit completely. So I never want to do that. So in case I don't understand or I'm not sure how I'm supposed to sign the back of the check, I just ask the teller, and they'll tell you how they want you to sign it. Okay? So, we're going to talk about making the deposit. So you have to endorse the check. Let's say your grandmother sent you a check for your birthday. You would just, regular endorsement is the blank endorsement. It's just you turn the check over, you sign your name, and generally you'd put your account number on it. The restrictive endorsement, that's a sample of it there. It says for deposit only with the person's name. And then the special endorsement there, it's transferring from you to someone else. Again, not a lot of people use that, and when in doubt, just ask them at the bank. Okay. So now writing the check. Here's some rules when it comes to writing the checks. Always use ink. Don't use erasable ink, don't use pencil. Make sure you use the correct and current date. The name of the payee. The payee is the person to whom the check is written. Who is getting this check? Who's the receiver of it? You have to write the amount of the check, not just in numbers, but spelled out in words, and those have to match. You have to sign it and put a note in the memo line if required. If you make a mistake, you have to start all over again. You write void on the check and you record that in your check register, and you have to start a new check. Here's a sample of a check. This section here is the owner of the check. This is the check number. The current date. This is the payee, or the person who's going to receive the check. So you can send it to a person or a business. The checks come with a line, and you write it out here. And then you fill in the remainder so no one can forge the check. On this line, you write the amount that's coming out of your account in numbers. And here you write it out in words. And again, you're going to do the line to fill up the space so no one could fraudulently alter your check. 36, and then the coins are always written over a fraction over 100. So we know 12 cents is 12 pennies or 12 100ths, so that's how you write it. This is the name of the bank that Carly keeps her account at. Carly's going to sign it with her signature that matches the signature on the signature card when she opened the account. And in the memo section, she might write what she wrote the check for, groceries or rent or for deposit or whatever. This part of the number here is the account number, and this number here is the routing number. And other banks can tell by this number where this check came from. Okay, this is an identifier. The routing number and the account number identifies where the check came from and who it belongs to. Okay, and just a note about writing bad checks, also known as bouncing a check or a rubber check. A bad check is one you write, but you don't have the money in the account to pay for. So you want to be really careful of that. You want to watch your account carefully and make sure you have enough in there to avoid bouncing a check. If you bounce a check, banks charge you a fee, and it can be very, very expensive. Okay? Never, ever, ever write a check when you know you don't have the money. That is unethical, and it's also illegal.